Amazon needs more warehouses. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of Heise Says US. Grab your stein of coffee, because I want to have a look at this article from Reuters. It's discussing, Amazon's slowing growth, but more importantly, their need for more houses. Let's start by having a look at the current Amazon share price. We can see it here, 3,000. That's just insane. 3,327 USD. Look at that insane growth there, Boom, boom. I hope some of you got into that, guys, because I wasn't investing in the US market back then. But one thing I've been doing, because if you've been following the channel, you may have heard me mention my pocket money investing. I'm trying to get little bits of money, literally from like crypto I earn or money that is unexpected, recycling bottles, scrap metal, stuff like that. And I'm throwing that in dividend-paying companies, a lot of them in the US, to get some exposure to that market. And so, some of the real estate investment trusts that I'm investing in focus purely on warehouses and logistics for Amazon and companies like them. So that's why I'm quite interested to see this article, the demand for more warehouses, because I know that's not exciting. It's not a sexy investment. It's not cutting edge investment, but I think it's slow and steady. And remember, never take financial advice from an architect on the internet. There we go. So let's have a look at this. Amazon faces more than slowing sales growth. It needs more warehouses. I'll just get my pen going here. There we are. There we have it. I remember when I first started working in an architectural practice, and they were doing warehouses. And I cut my teeth drafting some warehouses, and they were reasonably simple projects from an architectural perspective, but there was a lot of it coming together, the technical resolution and the documentation that was needed. Unfortunately, the fees that you could charge for that kind of crashed real quick. It got real competitive. So, Amazon needs to spend billions of dollars to expand its warehouse and delivery system, adding pressure to its share price, which dropped 7% on Friday after it forecast lower sales growth. Well, it's because it's just had insane sales growth because of everything that's going on. Come on. The company is racing to meet demand, even though shoppers are venturing more outside the home, and it is returning to pre-lockdown sales trajectory. Last year, Amazon turned goods away from warehouses for weeks because it lacked the people and space to fill them safely. It still is playing catch-up, said Andrew Lee, Vice President of E-commerce optimization firm IdeoClick, who formerly worked at Amazon. Amazon is running out of available space, she said. They're also running out of labor. Even after the company almost doubled its warehouse and transportation network in the prior 18 months, it sees significant investment ahead, not to mention cost from hiring and training staff. A tight labor market could force Amazon to raise wages earlier and add significant bonuses to attract full and part-time employees who now number 1.3 million people. It also has to get back on track to its goal of one-day prime deliveries in the United States. This is all part of a multi-year investment cycle for us, Chief Financial Officer Brian Osvarsky told analysts on Thursday. For shareholders, Amazon's spending to capture long-term gains at the risk of near-term profits is in a playbook it has deployed over 27 years, sometimes testing the patience of Wall Street. Slower growth and increased investments makes the shares more challenging, JP Morgan analysts said in a note. Amazon plans to add 517 facilities to its global distribution infrastructure in the coming years, according to logistics consultancy MWPVL International. That is 176 million square feet on top of the 402 million it already has. Well, maybe I'm also another thing to consider, investing in material manufacturers or suppliers, construction materials guys. Amazon did not comment on the accuracy of those estimates, but said its infrastructure rollout already is ramping up. Over the past 12 months, capital expenditures and equipment leases jumped 74% to $54.5 billion, almost double the growth rate a year ago. That may be par for the course for a $1.7 trillion retailer that wants to get bigger. Credit Suisse analysts said Amazon's ramp up in capital expenditures is more important than its revenue guidance. The consumer responds positively to higher, faster service levels, they said in a note. Unit volume accelerated following one-day Prime delivery launched in Q2 2019. We believe it's only a matter of time before we see a similar impact on Amazon as Amazon deploys fulfillment assets into the holidays. So there we have it, everyone. What do you think? What do you think? Are you surprised? Amazon is growing. It's becoming popular here in Australia. And, I mean, I haven't actually invested in any Amazon shares directly, but indirectly that's why I wanted to get some exposure to them, to the logistics and warehousing side of things. Perhaps as well in the construction and material side of things, which I also invested in. Maybe that's something to look at. What do you reckon, guys? Or just go straight into Amazon. As always, thanks for watching. Let me know your thoughts and opinions on this one in the comments down below. If you're a fan of the channel and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon, sign up for Self-Wealth or Stake, use our affiliate links at Amazon, eBay, Independent Reserve or Aussie Broadband, buy a merch from Heise Says, use Gold Pass from the Perth Mint or support us via PayPal. Take care and I'll see you next time. Bye for now.